Hi everyone, I'm Kieran Taylor.
I'm Martin Welsh.
And I'm Emma Murison.
And welcome to another episode of Those Pension Guys. Emma, let's get stuck into it. What are we talking about today?
So today we're going to talk a bit about when life doesn't go to plan. Right. So we've all got those moments in our lives where things move a bit faster than our finances can. And there's various different types of things, shocks, I guess I would call them, that we could have. So some of them are sudden, some of them are gradual, and sometimes, they're not always negative. Sometimes it's such a positive financial shock that it's overwhelming and you don't know what to do. So, Kieran, would you mind going into a bit more detail about what each of those could be?
Yeah. So I think sudden is obviously the one I think that probably has the biggest material impact, and that could be things, for example, like redundancy. I've been there, I totally understand that one. Falling suddenly ill or having an unexpected medical diagnosis, the unexpected loss of a family member. Again, I've absolutely been there. And that's kind of like the car crash moment. That's like the one that you just did not see coming and probably has that most kind of rippling effect in your life. And it's how you try and manage your finances with that. Gradual, understandably, is a little bit different and sometimes maybe more prolonged and happens a bit over time. Common one that we often hear is the realisation for people, for example, that they know their parents are going to have to go into care, or they know materially that their own medical history is starting to deteriorate a little bit. Something that you maybe have a little bit more foresight and a little bit more planning on that. And then there's also the positive shocks that you spoke about. And it sounds a bit daft to say, but things like an unexpected inheritance, a lottery win, just coming into a load of cash in a short space of time. And I always remember there's one example a client had said to me that I just feel, Kieran, that I've not done anything to deserve this. I feel unworthy of this money that I've got. And it's how you deal with that and process it afterwards. Because I think we always try and explain this with money, isn't it? That we always try and look at it from a technical standpoint and people think it's all cash flows and spreadsheets. But it's not. I think it's your emotions in it. It's how you handle and deal with that.
Totally. And like looking at the lawyer one, you often, the lottery one, you often see, lottery winner now in debt. Yeah. That sort of headline,
There was a classic, and I always remember, as a quote in the past, and I don't know who I could credit it with, but always said about never make a poor man rich. Now, what they'd said by that was that if you're someone that has never really learned how to deal with finances and you were given, say, a lottery win of £10 million, there's always the one that's the guy from Northern Ireland that was the bin man that then it was gone and I think it was in 3 years. It was in the sun and everything years ago. But because he never learnt anything, was used to living with scarcity, he was given 10 million, it was gone in a few years. But that comes down to that financial shock, I suppose, and how you deal with it.
That's it, totally. I remember, daydreaming about winning the Euro Millions and thinking, I better be prepared for if this happens. So just in case. And searching up on Reddit and finding this really full guide on how to navigate that, engage lawyers and have a real plan. And there's all these things, both negative and positive financial shocks that you can have. But it is important to have a bit of a plan as to what you're going to do. Without that, it's an emotional roller coaster potentially. So what sort of scenarios have you come across with clients in terms of the emotions and how they deal with it?
I think you see a lot of the fear. So it's scared to do something. You're scared if you're not used to money. You're scared because you've received money. It sounds silly, but I think you can definitely relate to that. The fear of what do I do now, or how do I do this, and exactly what you said. Maybe you don't feel like you deserve it. If it's been an inheritance that you didn't know was coming, that's kind of easy to look at it and think, well, actually, a lot of people find themselves sort of in shock and fear and unknowing what to do at that stage, and very much overwhelmed. It can be very overwhelming, but equally, so that's for if they were to receive money in a positive way. But equally, if you are the main breadwinner of the family, and unfortunately redundancy strikes, you're going to have that overwhelming fear, that fear of, having that weight on your shoulders of, well, if I'm here to support my family, I've now lost my job. That was the one of the biggest things that I was doing for the family, other than bringing them up, of course. And that would be very, very overwhelming. So that sudden change to your finances, if you don't have things in place, if you don't have good sort of emergency funds or sort of anything to fall back on, it can be really easy to get yourself into a hole very quickly. And that sort of overwhelming feeling of just being scared and not knowing what to do next. And having the pressure of the family, the finances, everything on your shoulders would be very overwhelming, of course. You've got sort of how the emotions drive decisions, excuse me, in terms of, when you're looking at making a decision, it's really, really easy as human beings to allow emotion to really play a big part of that. So for positive and negative behaviours, it's really simple to allow your emotions to get the better of you and potentially make the wrong decisions because you didn't want to upset somebody, or you thought it was the right thing, or it felt better doing it this way, or you're too scared to do it that way. And sometimes it is trying to step back from that and think, right, we're in this moment. It could be your parents are going into long-term care, your loved ones unfortunately got a terminal illness or anything like that. And sometimes it is just trying to take a moment to remove yourself away from that before you make any sort of impactful decisions. And a lot of the time it is, speaking with somebody separately or speaking to a professional advisor. And something that we absolutely encourage in our industry and our meetings would be, if somebody is going through one of these sort of shock moments in time of redundancy or somebody going into long-term care, we always think it's beneficial to say, look, bring somebody else to the meeting, because it can get much more emotional and you can be guilty. I think some people can be guilty of allowing that to take over their decision making instead of trying to step back for a moment and really just, pause, understand what's going on, try and remove a bit of the emotion if you can, and speak with the others and make the right informed decisions. And another one I was kind of thinking about was, there's been a couple of clients we've been lucky enough to onboard over the years, and one in particular I can think of, she inherited a large amount of money, but she inherited it way before we met. I think it was maybe 6-7 years ago that she inherited the money before we had actually onboarded her. And with her, it was looking at, she had received this huge inheritance and she didn't know what to do. So she kind of put her head in the sand. The solicitor that she was working with, the money came from there, went into the bank account, and it was still there 6-7 years later. She had done nothing with it. So one good thing is she hadn't gone and spent it, because sometimes you do see, I'll just do a trip, I'll just buy a car, I'll just do the kitchen, and before you know it, half the inheritance is gone. So that hadn't happened. But actually, because of the way that inflation works, we've gone through a really high inflation period, that she'd be lucky to get 10-15% of growth in the bank account from interest rates, because it wasn't in really good accounts. She hadn't gone and spread it between, the high interest rate accounts. And actually that 10-15% return in the bank was nowhere near what needed to keep pace with inflation, which was up about 40% at the time. So, if you have, potentially lost out on 25% spending power, so it still looks like the same number in the bank account. And I think that's where you look at it to think, that sudden change to your financial situation, without having a plan or thinking about things, it's easy to do nothing, and that can be really detrimental. Invested in pretty much any of the stock markets, global index stock markets, it would have made a huge amount more than it could have in a bank account. Of course, it goes up and down. We all know the risks involved, but it was just looking at that thinking, if she had engaged an advisor, she could have been in such a better position than she is, today.
So knowing it as you do now, though, what, with the power of hindsight, what do you think caused her not to do anything? Do you think there was one underlying thing or a couple of things going on?
I think it was mainly the unknown. That the person that she lost was her mum, who was the one that dealt with the family finances. She unfortunately lost her dad years before that. So that was naturally the person she'd always go to for financial decisions and advice. So now that person was gone, it was one of those of, this is all on me now. I'm the one that has to look after the money, because that's what mum done. So it was, I need to do this, I need to look after this. And it was almost that fear of getting it wrong, so I'll do nothing at all. And I think just not knowing where to start, if you don't know a financial advisor, if one of your friends can't recommend a good one, you can Google it, you can look online, you can do everything, but, sometimes that's overwhelming.
Yeah, it is.
You choose to do nothing in her scenario.
I think it is a really good point where, probably the perception of financial advice is, that we manage the money, the investments, but a lot of it is being that go-to person, especially in these difficult times, and having someone that for in that example, she can't go to her mum, but she knows she can go to her financial advisor.
Yes.
That makes all the difference. I think it is a very undervalued area of what we can bring.
It is, and we see it a lot. We've got some amazing relationships with accountants, solicitors, the professional services. And that can dovetail really nicely in when your solicitor is dealing with an estate. They can then try and help and, be helpful and say, look, you should go and seek independent financial advice. If you don't know somebody, we've got a few that we've worked with in the past and we've heard positive feedback, so we can recommend XYZ, for example. And I think it's challenging all professional services for both ways of, actually that duty of care, if you've got a client and you can only advise them professionally and legally, compliantly on this bit, but actually they need a bit of help here and here, instead of just leaving it to do nothing, trying to signpost that for them. It might be that you know somebody that can help them, or you can point them in the right direction. I think as financial advisors, accountants, solicitors, that's where we should take more responsibility to guide clients and try and help them, not just for the bit that we can help them with, but for the whole piece that they need help with.
I suppose it's operating properly holistically, isn't it? Like really looking at everything and understanding everything and hoping to say, okay, this is the avenue that you should look at and here are all the reasons why.
Totally. And of course, it's so important to have a bit of a plan for all these things, just generally, but especially with any sudden life changes. What sort of things can people do now to make a difference?
Yeah. I think the first thing I always want clients to know when you're preparing your finances, it's not about perfection, it's about preparedness. Because listen, shit happens. That's life. You can't prepare for every scenario, but you can do your best. And a lot of the time comes down to the key fundamentals. So it can be little things starting with emergency funds, for example, because as I touched on before, when you have the sudden financial shocks, that it tends to hurt the here and now the most. But if you have emergency funds, it's that little cushion, that little shoulder where you feel, okay, if something were to happen for me in the short term, I could still live the life I'm living now. Now, that can mean different things to different people. For example, I've got some clients that, Kieran, my number's 75. So what do you mean? 75 grand's what I like to keep in cash. Because I know it's too much, but that's my comfort blanket. That's how I know that if something were to happen, I've got that. I've got a year's worth of my earnings in the bank. I know I'd be okay. What we would often say to clients, though, is that as a minimum, if you are in what we'd say is accumulation, so you're still employed, you're still building your wealth, etc. If you've got as a minimum 3 months of your essential expenditure in the bank, that's a good place to be. If you're in decumulation, so say, for example, you're living off pensions or benefits and all these kind of things, you should have roughly about 6 months of your minimum essentials. But if you've got some of these little key things right in the early stages, it can't remove the shocks, but it can minimise them a little bit, I think.
Mm-hmm. It's that buffer, isn't it?
It is, yeah.
Yeah. And then going one step beyond the buffer, so that's the immediate, something's happened and I've got cover for a few months, of expenditure. Going over and above that is then looking at, insurance. So you're looking at, life insurance, critical illness cover, income protection. Some people have got really good jobs with amazing benefit packages, and that might be covered through their workplace, so it's definitely worthwhile checking what that coverage looks like. But equally, it's looking at your family setup. If you are a parent, you've got children, you've got a wife or husband, depending on how much you support the family income, it's really trying to understand how reliant are people on you, your dependencies, and can you insure against it? And sometimes in the past it's been looked as a bit salesy, almost like, oh, I'm going to sell you a policy. The guy from Prue comes and knocks at your door on a Friday and collects the premiums. So it's trying to move away from that to say, well, unfortunately, it's never nice to think about, but it's important to think about. If the worst were to happen, what then? It's not nice, but if you're sitting with a married couple with young children, you're like, okay, well, so and so's not here tomorrow. What does your financial situation look like? They were earning 3 times what you were earning, or whatever that might be. How does that impact the family setup? Have you got a large mortgage that actually you wouldn't be able to pay anymore? You'd have to sell, you'd have to move, you'd have to change where the kids are going to school potentially, and the impact that has on them. So it's making sure, what provisions have you put in place and what are you protecting against? And I've said it before, it's incredible. Like, probably more people insure their mobile phone than themselves. Like that, I haven't done the research, but I'd imagine if you've done the research, more people insure their cars, and that's because it's a legal requirement. So you insure a bit of metal, but a lot of the time you won't insure yourself. And quite often you'll say to somebody, what's your biggest asset? And they'll say, my house. You say, well, actually, if you're working for the next 20 years, you're on, let's say, 100,000 salary, to keep maths easy for me, that's £2 million. If you're living in a £200,000 house, actually your biggest asset is you, not your house. And that's what you should be insuring, making sure that should anything derail you and change, you've got that. And almost it's irresponsible. I'm a parent now. It's irresponsible to
definitely
to
hits
that.
you when you're a parent.
It does.
It's funny you say that. That was a conversation I had to have with a client. It'd be 2 years ago now, and I had to use that word. I'd say, Mark, what you are doing is irresponsible. So in his situation, self-employed was the only breadwinner in the house. But again, typical to what I've heard in the past. But Kieran, I'm a fit guy. I go to David Lloyd's 3 times a week. I eat okay, I'll be fine. I'm only in my 40s. We had 2 girls that were in private school. I had a wife that didn't work. So I thought, well, hold on a minute. So if something were to happen to you, because he was what I call the Henrys, the high earners, not rich yet. So it was a case of, well, if something were to happen to you now, the kids would have to go out of school, because how are you affording that? What's going to happen to the house? Because you've still got a huge mortgage on that. Your wife's going to have to go back to work. Who's looking after the kids? What you are doing is irresponsible. You are taking a needless risk that you don't have to. But actually having this policy in place would protect against that. And thankfully that's to talking to the right side of the fence. But that's another part of this job, isn't it? Sometimes you have to have those kind of stern conversations to let people know you're taking unnecessary risks where you don't have to.
And it is the harsh reality. You become their family advisor. How would we feel standing at their funeral, knowing that we didn't outline or point them in the direction, say like, actually you've got a need here, and that ties nicely into the cash flow modelling. So, good planning behaviour. Actually, if you have a cash flow model, and we talk about cash flow modelling quite often for people that are away to retire, how they decumulate, how that works for them. But actually, for the accumulators that are earlier on, well, what happens at this point if something happens to you at this stage and you can't work for 10 years or for the rest of your life? How much of an impact does that have on the family? And it's almost then you're able to layer over the protection to say, well, in this scenario, the what if scenario, rather than a market crash, becomes something happens to you, you can't earn anymore. Then you're able to say, well, here's the detrimental impact of that. How do we potentially insure against that? And then it is building that plan to then eventually, how does that make sure we don't derail your overall end goal within that as well?
I think another bit that's key for me is when you're going through that difficult moment, it's good to have someone there that's maybe quite objective to the situation. Now, if you're married, great, husband, wife, partners, whatever that might look like, that could be brilliant. But sometimes they're also invested in the situation as well. And if you think about your own life, even to little things, when you're up to high dough, do you make the best decisions? Not always, and it's understandable why that wouldn't be the case. But having someone objective, whether it's a friend, a family member, a financial advisor, someone that you can go to say, listen, I'm really stressed about this. This is what I'm thinking. What should I do? And then often with this job, I always say to clients that our job's just to give you ideas. You don't have to like them all, but it's just giving you a solution of what you may be able to do. But when you feel that you've got that support and someone that's working with you, I think you can benefit from that. Would you say that's fair, Martin?
Yeah, definitely. And it becomes that sort of, you bounce ideas back and forth, you get opinions. I'm scared about this, I'm worried about that. What if this happens? And, we've potentially seen something play out that they haven't seen before. So you're able to say, look, don't worry, in this situation, this is the types of things people usually do, or this is where we can add value.
It is amazing too how what stress can do to people, that it can really blur their vision of something that seems so obvious. A client of mine I could think of 2 years ago, made redundant really unexpectedly and had not prepared for it. It was someone we'd been working with over a number of years. We had a plan together. And he came in and stressed out his box, and he had no idea, what am I going to do? What he does is very specialist. It takes time to recruit those positions. And I said, well, you do realise we've been building up emergency funds and investments. And oh, wait, yeah, of course. I said, well, that's the point. So let's do some drip feed where we can look to say, okay, out of your investments, let's do some calculations. What do you need for the here and now to take some time, enjoy yourself, go in and find that recruitment solution. And it did take him 8 months to find a new role, but his investments were able to cover that. What was really interesting in that scenario, thankfully, that the markets have performed really well that year. So actually the market was able to replace back what he had taken out. So the winning position he found himself in was great. But he said, it's so obvious, Kieran, but because I was so wrapped in it, I just couldn't see what was in front of me.
Well, a lot of people just can't see the wood for the trees in that really heightened emotional state,
Yeah. I was going to say that the example I was actually literally just thinking about was back to protection again. Was a client that unfortunately got a critical illness. So she was diagnosed with a critical illness. She worked in quite a high-paced job. She worked 5 days a week. I think if you added the hours up, it was probably 7 days a week, to be honest. So a really high-paced environment, high-paced job. And she got into a position, unfortunately, where she would have to step back. So it wasn't, there was treatment. There was treatment there, so she went through that treatment. But thankfully, she had a critical illness policy in place. So she was in a position where there was a payment that was paid out as a lump sum, and she was able to use that to remove the financial strain, and it made such a difference, from when we first... It absolutely, and when we first spoke about it, when she first told me the diagnosis, she hadn't gone into hospital to be operated on yet, so it was all worry and scared and absolutely stress for her. And for her to come out the other side of that, say, okay, of course I need to deal with the health side of this, but actually work have been great, I've stepped back from my role. I only work 3 days a week, a little bit part-time as well, so start later, finish earlier. And she was able to look at it and say, well, but financially I can manage to do that. And unfortunately, if you were in a position where that was offered to you, but financially you couldn't afford to take that, then you're in a really difficult position. So it was brilliant, to see, from start to finish, of how she was then able to just focus on, right, I'm going to do my work, and I still enjoy doing that. I'm going to really focus on my health and my well-being and get to a good place again. And actually, my bills are all paid. I've got this covered, and I've got enough there for a few years that I don't need to focus on that right now. And it was really rewarding, I would say, for me selfishly. It was rewarding for me to see that she was actually able to kind of focus on that without worrying about the financial strains, and that the stress level just changed completely from that.
Yeah, brilliant. Brilliant. That's maybe a good place for us to close. So Emma, Martin, thank you very much for joining me again today. And for my own close here, I'm going to try and not go off on a tangent here, but stay with me. One of the things that I live by in life is actually, believe it or not, one of the first noble truths of Buddhism, that life is suffering. To exist is to suffer. What's interesting with that, though, is the second noble truth is that suffering is universal. So someone that's been on planet Earth, someone that in the history of time, has actually probably gone through a similar situation to yourself and managed to come through the other side. Now, where that ties into finances is being prepared and knowing that at some point in time on your journey, something unexpected, something difficult is going to happen. However, if you plan for it, it can definitely make it a lot easier. Now, if you have any questions or there's a particular example that you'd like us to cover, absolutely feel free to get in touch. You can do so via welshandtaylorwealth.co.uk. Thank you very much for listening, and we'll see you again soon. Take care.